Okay, guys, I'm going to go to Ask Scruff. Now, this one's for Jamel. Salute to you. But it's one of those questions where I kind of got to rein my neck in a little bit. I'll kind of explain it as we go. So, the question is, thank you very much for everything you've shared so far. More than welcome. It's why I'm here, kid. A couple of questions. Today traded pound yen. Pound yen was pretty good on the day you traded because I was in it as well. It was an A trade and you used gold night. And it went straight to profit. Excellent. That's what we're here for. That's what we like to hear. And with A trades, would it be agreed to increase position sizing? Oh, yeah. I'll come back to that. And it gave no pullback, so madness didn't get triggered. Doesn't matter. And I guess I wonder, would you capitalize on the opportunity appropriately? And also, when it was in the trade, the 5-minute charge bounced in and out of positive RSI, MACD, and I guess once you enter, you pay a little attention to bias chart. Right, okay. So there's a number of things to unpack here, and there's something that's glaringly obvious. Kind of chasing markets and falling into what I call what could have been, should have been. So it's woulda, coulda, shoulda. Now, in these scenarios, you teach yourself really bad habits. Now, when it comes to sizing, I have a maximum position size that I'm willing to go to. I then break that position size up so I'm never fully exposed at any one time. That's what madness is. Now, the way that I think about it is if I only get one unit in, well, that one unit is working for me. If I start thinking, oh my God, I've missed out on a trade, what I'm doing then is I'm actually living on wing and a prayer because I'm trying to put all my hopes and wishes on one trade. That one trade that happened to go for me. Now, if you do that time and time and time and time again, fine. Start putting bigger position sizes in from the offset. But if you're finding the market is moving against you, just tip your toe in and build the position up. Because I'm telling you straight, you start putting big position sizes in because you're chasing that money, you're going to lose every time. Every single time. So position size is important and it's not something to tinker. My way of it is I'll never increase it. I'll reduce it. And that way it keeps you in the game and it keeps you steady. Now, it gave no pullback. Yeah, it happens. But it's once in a blue moon. Markets very rarely go in a singular direction constantly. There's always a point of relief. So you've got to be prepared for that. And when it comes to the bias, well, I check it top of the hour, and once I've committed to the trade, that's it. I don't look at it again for another hour. And even then, if the trade's doing okay, I won't even bother looking at it. I'll just play the trade out, trail my stops. But I'm a targeted trader, so I'll target into the TP that I'm after. And if I've targeted 15 pips and I get 15 pips and it ran for 100 pips, I'm not bothered because I don't fall into shoulda, coulda, woulda. I genuinely don't. Every trade is individual and every trade is planned and every position is sensible. But the moment you start tinkering, looking to chase money, this job isn't for you because that's gambling. And the moment you're in gambling and the moment you're trying to push it hard, you'll fail. And it's why the industry has such a high sort of failure rate because everybody's looking for the one when it doesn't exist. Steady, simple steps. First job is outperform the bank. If you can do that, then you're doing okay. And it doesn't matter about the big swingers. Steady growth is what matters. Hope that one helps. Catch you soon.